Hi there. Today we're talking about everyone's favorite topic, health insurance. Now yes, health insurance is confusing, and no, it's not really everyone's favorite topic, but it is a crucial part of adult life, and not understanding your health insurance can quite frankly cause irreparable damage. Now at iHealthBrokers, we are licensed health insurance brokers and experts in all things health insurance, whether it's marketplace plans, private insurance, dental, vision, life insurance, and more. So today we're going to answer some of the most Googled and most important health insurance questions. Let's get right to it. So first, just some basics. What is health insurance and why is it so important? So basically, health insurance is just a contract between you and your insurance carrier in which you agree to pay a monthly premium in exchange for your health insurance carrier contributing towards your medical services. So these could be things like hospital costs, prescriptions, or even basic preventative care. Now, without health insurance, a simple trip to the ER could cost you thousands of dollars and possibly wipe you out entirely financially. So health insurance is there to mitigate that risk. So let's break down some of the most common terms that cause the most confusion. I want to talk about premiums, deductibles, copays and co-insurance, and of course, out-of-pocket maximums. Now, monthly premiums are the easiest to understand. This is what you pay monthly to keep your insurance active. That's it. Deductibles can be a little bit trickier. The deductible is the amount that you have to meet out of pocket before your insurance begins to contribute to the cost share. However, there are many services that are covered even prior to meeting the deductible. Usually more basic services like doctor's visits and preventative care and even prescriptions can be covered prior to meeting the deductible. But more extensive services like inpatient care will usually require you meeting the deductible first. Then there is the actual cost share, which can be broken down into co-pays and co-insurance. A copay is a fixed amount. Because of this, it is much easier to understand. It could be $25 to visit your PCP, $50 to visit a specialist, and $500 for a trip to the ER. Co-insurance, on the other hand, is a variable amount. It is a percentage. And because of this, it can be a little bit trickier to understand. After all, you understand that you're responsible for 20% of the cost, but what is the actual cost? Well, you don't know that until you actually have to have the service performed. And that's where things can get a little bit trickier. And then, of course, there is the out-of-pocket maximum. This is really there to protect you from major medical debt. Basically, your insurance carrier is keeping track of your medical spending. And should you actually reach that out-of-pocket maximum, they will cover the remainder of those bills for covered in-network services for the remainder of the calendar year. Now, when I'm talking about networks, really, that means HMOs versus PPOs. There can be different costs associated with in-network and out-of-network services. If you have a PPO and if you have an HMO, you will only have coverage for in-network services. Now, I want to delve a little bit further into PPO versus HMO and discuss EPOs as well. So when we're talking about EPOs, HMOs, and PPOs, really we're talking about networks. HMOs will only offer coverage in network. If your doctor is out of network, then you need to pay for the full expense. Now, the exception to this is, of course, a true medical emergency. If you need to be taken to the ER, it doesn't really matter if that hospital is in network or out of network. You can only be charged as if the hospital is in network. For PPOs, you will have much more flexibility. You can choose to go in network and out of network. However, those costs for an out of network doctor will usually be higher. Then there is more flexibility on the PPO side because with a PPO, you do not need a PCP, which is a primary care physician, and therefore you do not need a referral to see a specialist. With an HMO, you do need a PCP, and if you want to go see a specialist, you will need a referral from that PCP. Now, because HMOs are so much less flexible and because there is that restriction regarding networks, usually HMOs will be less expensive and usually PPOs will be more expensive. I'm talking specifically about monthly premiums. And then there are EPOs, which fall somewhere in the middle. So with an EPO, you do need to stay in network. However, you don't need a PCP and referral to see a specialist. That's sort of where the difference is split between HMO, EPO, and PPO. Remember, it's usually pretty hard to find PPOs for marketplace plans. Usually you'll have the decision between an HMO or an EPO if you're looking at a marketplace plan. Adding to the list of acronyms, let's talk about HDHPs and HSAs. What are they and who should utilize them? So an HSA is a health savings account. It can sometimes be offered as a benefit of an HDHP, which we will discuss in just a minute. An HSA is your account with your money in it, so you can contribute up to a certain amount that is set by the IRS every year. There are different thresholds for someone with an individual plan versus someone with a family plan. Now that amount that you contribute is pre-tax, therefore lowering your taxable income, your AGI and your MAGI. And this is part of the triple tax advantage offered by HSAs. So it lowers your taxable income. Also, these accounts, these HSAs are interest-bearing accounts, and that interest is not taxed. Additionally, you can choose to invest a certain portion of your HSA, and those earnings are not taxed. And remember, as long as you withdraw funds from an HSA for a qualified medical expense, and the list is truly extensive, then there is no penalty. Now, these accounts will roll over from year to year. Even if you don't actively contribute, the money there is yours. And if you hold on to it until you turn 65, you can convert it to a basic retirement account. Now, HSAs are great. The only caveat here is that HSAs can only be offered in conjunction with an HDHP, which is a high deductible health plan, which is exactly what it sounds like. It is a health plan that has a very, very high deductible, and very often the deductible is actually the same as the out-of-pocket maximum, meaning that only the most basic of services will be covered prior to meeting your deductible/out-of-pocket maximum. These plans are really not ideal for everyone, especially if you have small children or possibly more moderate health needs. Now, many people want to take advantage of the benefits offered by HSAs. However, we highly recommend that you first determine if an HDHP is right for your needs. Now, if you have questions about that, you can reach us in the comments below or at the number on the screen, or really just any health insurance related questions. We are licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. Additionally, we do release these videos on a weekly basis, so please make sure to subscribe to stay up to date. And of course, please like this video so we can get this information out there. All right, let's get back to it. Next, I want to address, I think, what is the most common question that we get asked about all the time, which are those ACA premium tax credits. So if you get a plan through the marketplace, you may be eligible for a premium tax credit or premium tax credit subsidy or premium subsidy. It's all the same. Basically, the marketplace is looking at your MAGI, or Modified Adjusted Gross Income. And based on your income and your household size, you may be eligible for a premium tax credit, which is just a tax credit that is paid up front and is reflected in a discounted monthly premium. So, this premium tax credit is completely independent of any other tax credits that you may receive. If you don't enroll in a marketplace plan, you won't be eligible for this type of premium tax credit. If you are eligible for a premium tax credit, this can save you thousands of dollars per year in monthly premiums. So it's very important to estimate your income as accurately as possible. And of course, if there are any changes in your income or location or household size, make sure to update your account. Because when it comes tax time, if you have underestimated your income, then you may have to pay a portion of that premium tax credit back. Now, of course, if you overestimated your income and you actually ended up making less, then you may just receive a larger refund. While we're discussing ACA plans, another common question people ask is about the penalties associated with not having health insurance. And this isn't really something that you need to worry about at a federal level anymore because that mandate was revoked as of 2019. However, some states like California, Massachusetts, and New Jersey do have individual penalties if you don't have health insurance. So how do these ACA marketplace plans compare to traditional health insurance or employer-sponsored group health insurance? Well, in all honesty, if you have the option of an employer-sponsored group health insurance plan, it's probably going to be a better option for you. Generally speaking, ACA marketplace plans may have higher monthly premiums and certainly higher deductibles when compared to group insurance offered through your employer. Also, group health insurance offered through your employer is not tied to your income in any way. So if you are a higher earner, that doesn't necessarily necessitate a larger monthly premium. On the flip side, if you are a freelancer or a gig worker and you get your insurance through the marketplace, if you're a higher earner, you're probably going to see a higher monthly premium. Remember that insurance offered through your employer must offer coverage to your dependents as well, but not necessarily always your spouses. And this can be a little tricky where those premium tax credits are concerned. However, if the premium for your employer-sponsored group health insurance is deemed unaffordable, then you would still be eligible for a premium tax credit through the marketplace. So when comparing plans, it's very easy to compare things like monthly premiums and deductibles. However, there are many things that people definitely overlook when comparing plans. For example, is your doctor in network? Are your prescriptions covered on your plan's formulary? What is the worst case scenario out-of-pocket maximum? And what are your telehealth options, as these are becoming more and more common? Now, there's no way around it. Health insurance can be pricey. So what are some ways that you can actually lower your monthly premium? Well, you can choose a plan with a higher deductible. Very often there is an inverse relationship between deductibles and premiums. So usually plans with higher deductibles will have lower monthly premiums, and plans with lower deductibles will have higher monthly premiums. You can also see if you qualify for those premium tax credits or subsidies that we just mentioned. You can contribute to an HSA because HSAs, or contributing to an HSA, will lower your MAGI, which might push you into a different bracket and make you eligible for a much larger premium tax credit. If all else fails, you can also look into some type of private insurance. Sometimes if you are somebody that is healthy and on the younger side, but you're ineligible for a premium tax credit, you may find that private insurance is actually less expensive, especially if we're talking about a short-term medical plan. Now, the issue with these types of plans is that they are, of course, only available for a short term, up to 3 months. They're not available in all states, and they don't really cover pre-existing conditions. But that is specifically short-term medical plans that we're talking about. Private insurance could still be an excellent option and offer you more flexibility and, of course, nationwide PPO coverage, which is very hard to find on the marketplace. But please, please, please do not become discouraged by monthly premiums and opt for a health sharing ministry or a health care ministry instead. These are scary things that are not really regulated, and as much as you may have a bad experience with insurance, at least it is regulated in some way as opposed to health sharing ministries. I've got a video that goes more in depth, which I will put at the end of today's video. So what are your options if you are self-employed or if you lose your job? Well, if you lose your job, you can look into COBRA. COBRA will allow you to keep your exact same coverage and basically will enter you into a special enrollment period to re-enroll for a period of up to 18 months. Now, the benefits are that, of course, you get to keep your exact same coverage. The downside is the expense. Because your employer is responsible for at least 50% of your monthly premiums, you can expect that with COBRA, your monthly premium is going to at least double, which can push it past where you can financially afford. However, if you've already met your out-of-pocket maximum for the year, even with a higher monthly premium, it still might be the smarter decision. Based on your income, you may also be eligible for Medicaid. This is federally regulated and state-run, so you would need to contact your state's individual Medicaid program to determine your eligibility. And of course, there's marketplace plans. If you've lost your job or you quit, you'll be eligible for a special enrollment period, so you can go ahead and enroll now. And if your income has severely decreased, then it's highly likely that you'll be eligible for a pretty large premium tax credit. So some tips that I just want to leave you with. Please don't chase the lowest premium cost, because that in and of itself does not necessarily mean that it is the best possible plan for your needs. It could end up costing you more in the long run. We'd also recommend that you work with a broker. Health insurance is just really very confusing. There are so many options and so many things to take into consideration. You don't want to end up making the wrong decision for your health needs. And of course, please don't wait until the last minute. If you are going to work with a broker, we highly recommend that you make an appointment well in advance so you don't feel rushed into making a less than desirable decision. If you have questions, you can reach us in the comments below or at the number on the screen. As I mentioned, we are licensed health insurance brokers and we're licensed nationwide with absolutely no charge for our services. If you want to learn more about those health sharing ministries that I mentioned earlier and why you should stay away, please make sure to check out this video over here. And if you want to learn more about marketplace plans, make sure to check out our All About Marketplace playlist. Before you go, make sure to like and subscribe. We'll see you next time.